One of the top performing stocks over the past year and a half has been a surprise to a lot of investors, and that is Coinbase. Coinbase was kind of left for dead when we went into what's known as a crypto winter, when trading volume dropped off a cliff. A lot of companies started losing money, including Coinbase, but the company was actually in a much better position than a lot of people thought. CEO Brian Armstrong was really quick to cut costs in 2022 and in 2023. And this has become the one survivor in the crypto market as FTX fell apart. Binance has run into its own problems. If you're looking for a centralized crypto exchange, Coinbase is the place to be. And that's become now the point of strength for Coinbase as a company. And going into 2024, if we look out to the next 5 to 10 years, if Web3, the blockchain, cryptocurrencies are going to be a big business, I think Coinbase is going to play a central role. That's why this is a company that I still think has a ton of upside, despite the fact that shares are up 315% from their lows in early 2023. So I want to get into exactly what I love about Coinbase today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they're going to give you their top 10 stocks to buy right now. Now I'm going to start with the latest thing that was happening in cryptocurrency, because this has gotten a lot of attention in the market. That is the approval of Bitcoin ETFs. Now, a Bitcoin ETF is just simply an exchange traded fund that tracks the price of Bitcoin. There are traditional fees, the way that there are with most ETFs, but it's an easy way to buy Bitcoin without having to go to a centralized company like Coinbase, which can sometimes be a little bit difficult to interact with, or buy on chain. So the idea here is that you're going to bring more buyers and billions of dollars into the market by having a Bitcoin ETF. I'm not sure if that's going to be the case, and it doesn't really matter for Coinbase because Coinbase's role with these ETFs is being the custodian. They're the ones that actually hold the Bitcoin on behalf of ARK Investments and BlackRock. 11 out of the 13 applications for a Bitcoin ETF, Coinbase was the primary custodian. So that's really telling where Coinbase's position in the market is. They're a trusted place for large financial institutions trying to get exposure to the blockchain and cryptocurrencies. And that's the role that they're playing in that business right now. And if we start to see more and more financial products move to the blockchain, I think this is indicative of the company that a lot of these institutions are going to trust. I've done some videos on this in the past, but Coinbase has tested doing debt instruments on the blockchain. So instead of going to the market through an investment bank, you just sell these assets on the blockchain. That way you know where the owners are. You can actually trade them more easily. You can fund them automatically and pay out distributions automatically. They've tested this in international markets and it worked as they expected. And that's what you would think. I think that's one of those products that is going to become more and more valuable as companies tries to raise capital a little bit more efficiently, as investors want to trade some of these assets more efficiently. And that's a role where Coinbase is going to be an infrastructure partner. I've called them a little bit like a combination of Google, AWS, and JP Morgan in the blockchain space. And these kind of products is where they're going to be the banking partner and kind of like the cloud partner for a lot of institutions. So the fact that the Bitcoin ETFs are leaning on Coinbase, I think is a really positive sign. The other thing that is really working in Coinbase's favor right now is they're not only taking market share, but also there's more and more trading happening on centralized exchanges right now. As I'm recording, over the past 24 hours, $2.7 billion in trading volume on Coinbase. That compares to $14.3 billion for Binance, but that spread has come down dramatically. That's about a 5-to-1 spread. A year ago, that was 10-to-1, and Coinbase wasn't just behind Binance, they were behind FTX for a long time. So Coinbase has taken market share, is going to be generating more revenue. We'll see what those numbers look like for the fourth quarter. But I think that's where they're going to see financial improvement first. And that is really where a lot of their cash flow came during those pandemic years, is because trading picked up and they make money on volatility. They don't make money if the price of cryptocurrencies go up or down. They want people to make transactions. That's where they make their money. So I think the fourth quarter is going to be really good. And if this activity continues to pick up, that's going to be a positive sign for Coinbase. And again, they're the one company left for most of the world to do their trading because Binance has been pushed out of particularly the US market. So Coinbase continues to move into more and more markets, more and more products, and it's that trusted financial institution. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The final thing, and don't sleep on this, is Coinbase's involvement with the USDC token. Coinbase was a 50-50 partner in what was called the Center Consortium with Circle, another company, to launch the USDC token. And now Circle has filed confidentially for an IPO. Based on recent changes that happens between those companies' relationships, Circle now runs the USDC token, but Coinbase generates revenue from it and now has an equity stake in Circle. Let's go through some of these details. This is a release from the fall when Circle and Coinbase announced some of the changes to the USDC token. They were winding down the Center Consortium because it was no longer needed, and USDC will now be run by Circle itself. But they're going to be doing this together. As part of the agreement, Coinbase is taking an equity stake in Circle. We don't know exactly the size of that equity stake, so we'll see if we get some more details on that. And Coinbase will continue to generate revenue from USDC reserves interest income. I'm going to get to just how big that number is in just a second. But the other thing is that Circle, now that it's focused on the USDC token, is moving to more and more blockchains. If USDC can become the go-to US dollar-backed stablecoin, that would be a valuable position. And I think we're going to be doing a lot more transactions on the blockchain with stablecoins and not cryptocurrencies. So that bodes well for a business like Circle. And the amount of money that we're talking about for Coinbase is just phenomenal. This is the stablecoin revenue that Coinbase generated. And on the right is Q3 2023, $172.4 million in stablecoin revenue generated by Coinbase. This is because of the partnership with Circle. So this is arguably the biggest savior of Coinbase over the past year, and I think it will continue to get better. And this is one of the reasons. This is the market cap of the USDC token. So people can exchange these for actual dollars, and that's how you peg it to a dollar. But the market cap has started to pick up, bottomed out at about $24 billion, and now we're up getting close to $25.5 billion. There was a big drop for a number of reasons in 2023, but again, as Circle has started to take control of the USDC token, now we're starting to see the market cap pick up. As there's more assets under the USDC token, that means more interest revenue because these assets are backed with things like treasuries. So that is good for Coinbase long term. Add all these things together, and I think there's a lot of momentum for Coinbase. People are going to be using the blockchain for more and more things going forward. And it's not just going to be trading, number go up, number to go down kind of thing. It's going to be real businesses building real things on the blockchain. And that's where developments like the Base blockchain that Coinbase has done, the USDC token, the wallets as a service that Coinbase has, the ETFs, all of this infrastructure, all the things the company has been building over the last 5 years are really going to start to generate more and more revenue. That's one of the reasons that the stock is up so much over the past year. But I think we're just scratching the surface of the potential for this company and the blockchain in general. In the future, you probably won't even know that you're interacting with the blockchain. You're just going to be using it as rails for things like payments or maybe buying stocks or bonds. So there's a lot of optionality for Coinbase. And I think the financials are going to get better for the reasons that I outlined. More trading, you got custodial revenue still coming in from the USDC token. I didn't even get into the Base blockchain revenue that could start to be meaningful in 2024. There's just a lot of reasons to like Coinbase. Now, this is going to be a very volatile stock, and so I wouldn't be surprised if it pulls back. But long term, this is a company I'm looking to accumulate more of, despite the fact that it is one of the best performers over the past year. So what do you think about Coinbase going forward? Love to hear your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.